friends, welcome back to this cumulative delta quick review to see how that is working out for us. And again, this is part of the methodology which is central to generating the alpha for yourself. Now we made a thesis that we are going to be doing technical analysis on this side of the equation, which is the cumulative delta, and we are going to look for double tops, double bottoms, third touch, and you can use any kind of technical analysis, any patterns on this. And this is where we are collecting bids and ask and see which one is aggressive, hitting the bids, hitting the ask, lifting the bids, and things of that nature were discussed in the last video. And as I said, third touch is critical to understand, to get some bias of the direction, which way the sentiment is going to flow. Now on the left side is just a ES chart, and on the bottom we have Tesla frequency formula, which is embedded into this, and with some on-balance volume and other juices. But we are just creating the vibration frequency by denormalizing this trend and detrending the data here. Anyways, so that is that. Now on the right side is pure cumulative delta, as we discussed last time. You can slow it down, make it faster. We are discussing the rate of change of bids and asks. That is what is driving the market. Now in the long term, fundamentals will be impacting the market. In the short term, which is like a news driven events for a given hours or days, they may overtake the phenomena, right? And as a day trader, you guys need to understand where those emotional points are, and this is one of the very critical method which you can just use, which I'm giving it to you for free. I think you should leverage this, right, and make some money, and then get into the hedging program. I'm trying to help you in as many ways to get you to seven-figure trader, but so this will at least get you started to get some funding for your professional education, and one day you might be a top hedge fund manager, right? So, but you need some top knowledge to go with this. Okay, so let's get back to this. Sorry about that. All right, so here we are, right? We did this introduction to cumulative delta. This also volume delta, and then there are some other kinds of deltas. Then there's looking inside the bar delta and the value. You guys are used to VWAPs. We have discussed VWAP based trends. Trend is up on a very large scale since March, as we know. We made a bunch of videos, right, on that. Then you have to understand the frequencies. If you're following the blue lines, these are the frequency bars, right? You should track all this because this is business. This is not I would say a fun game, because once you start hurting your brain by doing the wrong things, it's very hard to recover from that, right? So that's all I want to say on this subject. Anyway, so here we are. Let's start from here. Market is going down, 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 down. We in this cumulative delta, third touch is very prominent, right? So the third touch came here. You can just see. Only got 10-point move. All right, that's all I want to just discuss there. Nothing more, nothing less. First touch, third, second touch, third touch right here. Short, short, short. Again, what happened? 13-point moves. We have this trend. Let it settle. Let it go down. This is going to be a short, right? You just don't have to even look at the price if you just know how to manipulate these deltas, how the buyers and sellers are behaving and interacting, how they're creating the shapes. You can just see that, right? And then this is where this is the higher level construct of in the context, and we dig deeper inside the bars as a last step. We will discuss those videos later. Anyway, so third touch, 1, 2, 3, third touch. Expectation is most likely we might be going in the short side, and it does. And again, same thing, third touch, market is touching here, right? So this is very fast moving chart, because we are scalping here. So, and there we go. market moved up. So if you have taken this or this, they both worked out in the same fashion, right? There we go. Now market is making a what we call as forced apex. You should try to force apex in a very volatile instruments, and because where it goes, you go. It's as simple as that. Watch some videos on NASDAQ. How we suggest you should trade anything volatile instruments. You should generate those apexes. Get creative, right? Apex, apex, apex. Wherever it closes, go. Go with the flow. But as far as the cumulative delta is concerned, this is from this day. This is the third touch. They are following this trend line, right? Look at the price. Price is all over the show. Price is going somewhere, but you can see the buyers and sellers, their true intention is exposed here. And it goes, you go. This is how you want to trade your instruments. Now this low is made here, right? Why was this low made? Extend this line forward. You knew this long back before it happens, right? And I'm not saying just blindly go here. Just, you know, the point is, you know the levels and the context change areas and the levels. You do it right here. You know it right here. And now your job is to construct a tactical trade. On 16th, I mean, you're using blue lines on 16th. Right there, right? It came down into this blue level and just took off. All right, so at least let the trend line break. Force an apex. Wherever it goes, you go, right? At the same time, the context was already set up. You knew this line was already beamed. That they might come down here, and that's all there is to it. So on the double bottom, it just stopped here. Not too happy about it. Just took it off. This is again going back to our channels. Watch the videos on shift channels, how to do it. Everything comes together, right? You have to think holistically with 9 dimensions. This is not an oscillator game. This is a mind game, chess game right here. Double top right there. It goes, just does it. So this is what is happening behind the scenes. You can easily see this way, and as you get proficient and profitable, you go deeper into other things. If you don't have anything else, get this going, make some money, then join the professional trading group. All right, so this one, if it goes down, could be tested. We don't know at this point, right? So I'm just looking at the biases. All right, so let's look at this one. I think we already did all this. Last double market came here, reset, double top, right? And then it went down large and hard. So this doesn't tell you. We have ways to know exactly where their market makers are going to come. That is part of the level 1 market maker education, hedge fund education. We know where they are going. So first you need to understand the basics. And if you can't invest, I'm just giving you as in good faith friends to use these things. It will help you. We are also posting these on Twitter. If you go to that handle, you can get that going. Again, if you have 2 points, you can parallel create a line, and then you can just say parallel create. Some tool says clone, some tool says something, or just right click here says clone, right? So whatever the tools you're using to accumulate this deltas, you can just 2 points and then create a parallel line and move it in the middle pivot. So we have pivot 1, pivot 3, pivot 2 in the middle, and you have a future trend line bias. See that? long here, long here, sideways, long here, right? Third touch on the top, fourth touch right here. It doesn't tell you how much it will move. Same thing here. Now you call this in a downtrend, I call it apex. You call it whatever you want to call it. It's just you're constraining the market into patterns. So double top is here. Now what are you gonna do? So this could be a top coming here. We don't know if it worked out or not, and if you want to go short, this is a short, or break of this is a short as well, right? Either way. So what day is this? This is 7/5. Let's look at our frequency and other things on 7/5. This is what we are posting for your benefit. So 7/4, 7/5. Sorry, we went too far. Seven five is right here. See that? So we already had this yellow frequency posted as well. The market is going here based on the frequency bars, and then we have this low level. And then if you are not following this, and you don't want to follow this, again, this is just free education for friends of interest, just to show you what is possible. This is all just scratching the surface, as you guys know. So that is, we already had the top intentions from the market already expressed to us by our frequency models. So this is where we were. Now if you missed it, now you have this double top and break of this, right? So sideways action, you could have gone up or down. Break of this, we are coming from the frequency top, bias is on the short side. All right, and then again we know this is these are the endpoints, and we know this based on the reflection circle methodology. So that's it for this quick review. Just want to keep you on the right track. Thank you.